Hey everyone, welcome back to Corporate Decoder. Today, Sizzle Acquisition Corp, the SZZLU or SZZLU, just filed a business combination agreement, and I'm seeing a few things that will affect shareholders. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing details a big merger between Sizzle Acquisition Corp, the SZZLU, and a company called Trasteel Holding S.A. And while it looks like a done deal, there are important conditions and timelines to watch out for. Alright, let's dive into this Form 8K filing. Think of this as the official announcement that Sizzle Acquisition Corp, THUC, which is a special purpose acquisition company, or SPAC, is merging with Trasteel Holding S.A. This is a huge step because it means Trasteel will become a publicly traded company. The main document here is the Business Combination Agreement, or BCA. This is the contract that lays out all the rules for how this merger will happen. It was signed on the 13th of April 2026. This isn't just SZZLU and Trasteel making a handshake deal though. They're also planning to set up two new companies, Pubco and Merger Sub, to make this whole thing work smoothly. So what does this mean in plain English? When everything is said and done, Pubco will essentially buy Trasteel Holding S.A from its current owners called sellers. In return, the sellers will get shares of Pubco. At the same time, your SPAC Sizzle Tub will merge with Merger Sub, Sizzle to 5, but it will become a part of Pubco. This means that if you own Sizzle II shares or units, you'll end up owning shares in the combined company, which will be Trasteel, but under the Pubco name. Now, before this merger happens, there are some important things that will automatically shake out. Any units you might hold, which are usually a share and a right to buy more shares, will be broken apart into their original pieces. Also, any special Class B shares that the founders or sponsors of SZZLU hold will be converted into regular Class A shares. Then, all these Sizzle II class of shares will be swapped for shares in Pubco. Here is where we get to the money. At the end of the day, the sellers of Trasteel are going to receive about $800 million worth of Pubco shares. Each of these Pubco shares is valued at $10 for this deal. Keep in mind, this is the value set in the agreement, not necessarily what the price will be after the merger. This part of the agreement is about promises. SZZLU, Trasteel, and Pubco all make promises to each other about the state of their businesses. They're essentially saying, here is the truth about our companies, and if anything we said turns out to be false, there can be consequences. However, these promises, called representations and warranties, do not last after the deal is closed. This is pretty standard, but it means that once the merger is finished, it is harder to go back and claim someone misled you. These are the ongoing promises that the companies have to keep between signing this agreement and actually closing the deal. They basically have to run their businesses as usual, cooperate with each other, and try their best to make this merger happen. There are also specific rules about sharing information, advertising the deal, and keeping things confidential. An interesting point here is the no-shop clause. This means Trasteel, the company being acquired, can't go around looking for other buyers or discussing competing deals. They are pretty much locked into this deal with Sizzle II. However, there is a small exception. Trasteel is allowed to try and get up to $75 million in debt financing, which might even turn into their shares later. They can also explore other acquisition ideas they were already looking at, but they can't sign any new agreements without SZZLIS. Okay, Trasteel has also promised to get audited financial statements from a qualified accounting firm. They have to deliver these by the 31st of July 2026. This is important because having those audited financials is usually a key step before a SPAC merger can be finalized. Let's talk about who will be in charge after the merger. Pubco's board of directors will have 7 members. Trasteel gets to pick 5 of them, and at least 3 of those have to be independent. SZZLU gets to pick 1 independent director. The last spot will be decided by both Trasteel and SZZLU together. This shows Trasteel will have the majority control of the new company's board. They are also planning to set up an employee stock option plan called the Pubco Equity Plan. When the merger is complete, this plan will have enough shares set aside for about 15% of all the company's shares. This is typical for incentive programs to retain and attract talent. To get this deal approved by regulators and shareholders, Pubco will have to file a registration statement with the Securities and Exchange Commission, or SEC. This document will include a proxy statement, which is what Sizzle II shareholders will vote on, and a prospectus, which is for potential investors about the new company. Here is a crucial part for funding the deal. SZZLU and Trasteel are committed to raising at least $75 million through what is called a PIPE financing. PIPE stands for Private Investment in Public Equity. This means they're going to find private investors to put money into the deal, buying shares of Pubco before or at the time of the merger. This funding is essential to make sure the deal has enough cash. Now we get to the hurdles. For this deal to actually happen, certain conditions must be met. Both Sizzle II and Trasteel shareholders need to vote yes. Government approvals need to be secured, and there can't be any laws stopping the deal. Pubco's board has to be in place and its listing application for a stock exchange, like Nasdaq, needs to be approved. For Trasteel and Pubco to be forced to go through with the deal, SZZLU has to meet certain promises. Their financial statements need to be accurate. They must have followed all their agreements, and there shouldn't be any major negative events impacting SZZLU. A big one here is the minimum cash condition. This means that after considering shareholder redemptions and paying off expenses, SZZLU and Pubco together must have at least $75 million in cash, including the money from the PIPE financing. If they don't hit this cash target, Trasteel doesn't have to go through with the merger. On the flip side, for SZZLU to be obligated to close the deal, Trasteel and Pubco have to keep their promises too. Their financial statements and business operations need to be in good shape, without any major negative impacts on Trasteel or Pubco. They also need to have all the necessary signed agreements from Trasteel's shareholders. There are also specific reasons why this deal could be called off. If both companies agree, they can end the deal. If the conditions to closing, like shareholder approvals or regulatory OKs, aren't met by a certain date, which is the 10th of October 2026 or 4 months after the audited financials are delivered, either party can walk away. If a government agency stops the deal permanently, it is off. If one party seriously breaks the agreement and doesn't fix it, the other can terminate. And importantly, if Trasteel doesn't deliver its audited financials by the set deadline, SZZLU can terminate. A standard clause for SPACs is the trust account waiver. SZZL2's public shareholders put their money into a trust account. This part of the agreement confirms that Trasteel and its related entities won't try to claim any of that money in the trust account. It is essentially saying that money is only for SZZL2's public shareholders to potentially get back if the deal doesn't happen or for use in the merger. Now let's look at some related agreements. The sponsor support agreement is between SZZL2, Trasteel, and the sponsor of SZZL2, which is VO Sponsor II LLC. The sponsor agrees to vote all its SZZL2 shares in favor of this merger. They also agreed to give up some special anti-dilution protections on their founder shares. This is important because it ensures the sponsor is actively supporting the deal and makes it harder for them to block it. Each of Trasteel's shareholders has also signed a lock-up agreement. This means that after the merger, they can't sell the Pubco shares they receive for a period of 6 months, or until Pubco goes through a major restructuring. This is designed to prevent a flood of shares hitting the market right after the merger, which could drive down the stock price. Similarly, Trasteel's shareholders are signing company support agreements. These also commit them to voting for the deal, and actually signing the share exchange agreements needed to transfer their ownership. It is another layer of ensuring everyone involved is on board and moving towards closing. The officers and directors of SZZLU, along with the sponsor, have amended their earlier letter agreement. This amendment basically says Pubco can enforce part of that original agreement, and Pubco will take over SZZLU's role in it after the merger. Their lock-up period on any Pubco shares they get will also be a similar 6 months after the closing. Once the merger is done, Pubco and the sellers of Trasteel will sign a registration rights agreement. This means that Trasteel shareholders will have the right to have Pubco register their shares for sale to the public. This is similar to the rights that the original SZZL2 shareholders, like the sponsor, have. It ensures that after the merger, the new shareholders can eventually sell their shares on the open market. There is also an amendment to the founder registration rights agreement. Pubco will take over SZZL2's responsibilities under this agreement as well. The rights for the original SZZL2 holders will be equal to those of the Trasteel sellers. This harmonizes the registration rights for both groups of shareholders. Finally, there are share exchange agreements. These are the individual contracts that each Trasteel shareholder will sign to officially exchange their Trasteel shares for Pubco shares. It is the final step for them individually to become shareholders of the new company. The filing also includes important disclaimers and information about where shareholders can find more details, like the SEC website and how to request documents. And as always with these filings, there is a cautionary note about forward-looking statements. These are statements about what the companies expect to happen in the future. They use words like may, will, and expect. It is a warning that actual results could be very different due to various risks. They're telling you not to rely solely on these predictions. Looking at the exhibits, we have the main business combination agreement as Exhibit 2.1. Then there are various other agreements like the sponsor support agreement, lock-up agreements, company support agreements, and amendments to insider letters and registration rights. These are all the nuts and bolts that make this merger happen. Now, let's put this into perspective. This merger is a significant event for Sizzle Acquisition Corp. The SEC. It is moving from just a shell company looking for a target to becoming a part of a real operating business. Trasteel Holding S.A, the $75 million PIPE financing goal is critical. If they don't hit that, Trasteel has a strong reason not to close the deal. Historically, SPAC mergers that struggle to secure adequate PIPE funding often face more hurdles, or the merged company may struggle out of the gate. A comparable situation would be many of the SPACs that merged in 2021 and 2022. Companies that couldn't raise sufficient PIPE capital often saw their stock prices falter significantly in the year following the merger, with some seeing declines of 70 to 90% from their initial SPAC IPO price. Especially for smaller companies, a major risk I am watching is the minimum cash condition. If SZZLR and Pubco cannot collectively secure at least $75 million in cash after redemptions, and before paying expenses, the deal is off. This is the ultimate hurdle that Trasteel is watching. My biggest concern is whether the market conditions will allow them to complete that crucial PIPE financing on favourable terms, or at all, by the outside date mentioned in the agreement of the 10th of October 2026. This transition from being a SPAC to a fully operational entity is complex, and the cash position is everything. What I am actually looking for next is the filing of the registration statement, which will give us more details on the combined company's financials and strategy. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.